I want to give you guys a quick recap on the actual trades that I've been placing on my account. Um, this one right here was unfortunately a trade that I didn't stick to the plan on. I got scared. I actually ended up leaving the trades a little bit too early. I did that also with another trade that I'm going to go over with you guys, but it's because, for one, I actually, learned a new strategy that I think is a winner out of all the strategies that I've actually gone over. I actually understand this one. It's very simple. As you see, I only have one, two, three lines on my chart, and I use those as my entries as well as exits. So this was the liquidity grab. Um, from the New York session, this is the Asian session, the blue box. And basically, I'm gonna go ahead and just give you guys the rundown on what I was looking at. All right. So before um, Asia started, I mapped out this high right here. This high and this high from the New York session, right? And I figured, based on the strategy that I used during the New York session, that Asia was going to do the same. Only this time I'm trading gold. During New York session, I trade NASDAQ like everybody else. And I just wanted to test it out and see if the same strategy applies during Asia session for a different asset, which is gold. And it played out almost perfectly. Okay. What I mean by almost perfectly is the fact that I got out early. I got scared. I thought it was going to reverse and actually go for this line, which is the other liquidity. Okay. But let me go ahead and break down the trade. Okay. And show you guys exactly what happened. So, um, once Asia started around, I believe, 1900 or something like that. I just watched price, and I was waiting for price to go above and grab the liquidity of this line, and it did. So right here is a fair value gap. Okay, that was formed, right? That's a bullish fair value gap, but we had entered liquidity, the range again, and we actually retested that, the actual top of the range. Okay, but we never continued to go bullish and try to reach this liquidity up here. So what I was waiting for, which it took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19 minutes before we actually formed an IFVG. Okay, an inverse fair value gap, which means that we are more than likely going to reverse, start heading down towards these um, points of liquidity right here. So under a low that hasn't been mitigated is always going to be resting liquidity. And these are two levels where I saw equal lows and resting liquidity, which is what I was using to target for this trade. So as you see, I entered the trade right here, okay, on this candle, and we went down into profit. Right here is about 200 and something dollars in profit, and then we retraced, and that's when I started getting nervous, like, okay, did we just come down to grab these lows right here? And then since we grabbed this liquidity under this low, are we going to reverse and target this liquidity up here? So I was getting nervous. I held the trade. I held trade. It came back into profit right here. And then it came all the way down to about $300. It was. So once again, once we got below this low, I was like, okay, it should continue to go all the way down to my target. Did it do that? No. So my stop loss was above these highs. And what I did was I lowered my stop loss into profit probably about right here. Um right about there. And I was like, okay, if it goes up anymore, then I want to get out of this trade because I don't want to take a gamble. I don't want to take a loss. And, I rather get out at break even than to lose a trade. So it ends up going up and it takes me out. And it gave me about what, $24 in profit. So I wasn't mad about it. I figured I was saving the capital. But my first mind said stay in the trade, let it hit either stop loss or take profit. Well, guys, I've blown account after account after account after account after account after account. I could even show you on my dashboard. Well, I'll get to that in a second. I got quite a few blown accounts. I got a payout and I gave all that money back to the markets. So I'm a little bit nervous when it comes to this eval because I need to get a payout. I actually just want to become a professional. You know what I mean? I want to do this full time. So I can stand drawdown. I can stand taking a loss, but at this stage, I kind of just also want to protect my capital. So with going down here, let me see what that would be. Just a little bit under. Oh, so that's a 1-to-1. They say when you get into profit and you get to a 1-to-1 risk to reward, you're supposed to move your stop loss to break even. So I did correctly. Okay. According to the people that I follow when it comes to trading. So with that being said, I did the right thing now that I look at it. But sadly, it ends up I closed my laptop, I got off the computer, and I was satisfied with my break even. I opened up my phone probably, I don't know how long later it was after I got, but when I did open my phone, I saw the market had just hit my first take profit, which would have been this line right here. It was somewhere around here, and I was like, oh my goodness. If I would have stayed in this trade and waited until the exit, I would have made a total of $1,400, I believe. 12 to $1,400. Okay. Risking somewhere around 300. So yeah, it was a 3 to 1 3 to 1.8 risk to reward. So a little bit under $500 I would have been risking, but I actually had my stop loss, to be honest, above these highs. Okay, so it was a 4.8. So yeah, 3, 12. Yeah, 4. So it was about $300 in risk. Um, Initially, because I had my stops above there. And when I opened my phone, it was all the way down here. And I was like, oh my gosh, I should have just stayed in the trade. You know what I'm saying? It's a learning experience, but the fact that I had the narrative, the correct narrative on where the market was heading, and the my to take profits, because as you see, I actually entered the trade again when it was right here. Actually, when it retested right there, I got into the trade again, and I just took it down to this level, which gave me a profit of total. Let's look at it. I made about 146 on that trade. I'm up $1,333.20 on the account, with no losing trades, but I am learning the hard way to let it hit stop loss or take profit. That's what I'm going to be doing going forward. But as you see, there's some good levels because look, it hit and then it went up. It hit and then it went up. And I'm not sure if it's going to seek any lower liquidity, but I'm not going to be looking for any opportunities to get in. I'm actually just going to take my winnings and move on because I've learned the longer I stay in the market, the quicker I lose my account. I've lost accounts within minutes because, poor money risk management and just hopping in trades, not knowing where the market was heading. I'm thinking it's going up and it's actually, stop hunting and it's going up for a quick second just to snatch the liquidity only for it to do what it's doing right now. So you would think that it's going up, right? Boom. But as you see, we have another fair value gap right here. and oops, it just took out the liquidity right here. So I would think this is before I would think that this is a reversing market. Boom, boom, a double bottom. We're going up. But according to order flow, it looks like the market has respected this. Okay. This disrespected this fair value gap, and it actually retested it and is heading down. So it might be seeking this liquidity right here, or let's see. Yeah, it's definitely going on. Look, this is a fair value gap right here, a bearish fair value gap, and it is respecting that. And the market is definitely heading down. And it might be going down to seek this liquidity right here. I wouldn't be surprised if that's where it's headed, because that's the only liquidity that I see other than this right here. Um, so I'm gonna mark these levels just for, just to keep an eye on the market and see for myself. But it is respecting bearish value gaps. It's making lower lows, as you see. This low took out this low, and these are things that I've learned over time after blowing account after account and just studying the markets as much as I can for different YouTubers, YouTube University, shout out. I've spent hours, countless hours, just learning. I've paid for courses, I've traded live with people, and this seems to be the best strategy so far that has been working. I have 100% win rate so far, and it's simple. All right. So here's another trade. This trade I actually won this morning, and it made a quick $330, $31, right here. So let's go. As you see, this is 9:30, right? And I could have made more, but I was on my way to work, and I was glad that I was able to get in and out of this trade very quickly, based on what all right. So let's go. Let's go. Let's go. Here we go. All right. So to break this one down, this is on the 1 minute chart. As you see, 9:30 opened up. I already had these levels locked, marked up, and at 9:30, this candle went all the way up here, snatched the liquidity, and it also created a order block right here. No, this is an order block. Let me go ahead and mark it out. This is an order block, and that order block got respected. So there's different entry models that you can use, but that's an order block, right? And let me get rid of this real quick. So this was my trade, okay? As soon as I saw this candle go up and respect this order block, I went ahead and waited for this, and then I got in right there, because I knew that it was going to go down and seek the bearish liquidity, okay? The liquidity resting under, let's go ahead and show you. These are the levels right here where liquidity is resting. So I went ahead and went for a quick 12.47 risk to reward, and that actually got me out in a matter of, let's see, 3 minutes. In 3 minutes, I made $330 on that trade. Now, if I was still at my computer, I dang sure would have took this image right here, because as you see, we did what they call a turtle soup. It's weird, but here's a fair value gap that immediately got inversed. So I would have entered right here, put my stops below the level, maybe at this low. Okay. Let me go ahead and map it out for you really quickly. I would have entered right there and put your stops just below that one, and I would have targeted either this for another 2 to 1 risk to reward, or I could have even went as far as that top level, which would have given me a 4 to 1 risk to reward. But I wasn't at my computer and I wasn't able to capitalize on that move. Now, let's go to another trade that I did, what I did tonight on. Okay. This one, I was so disgusted. Um, this one, I was actually at home and I was able to, on the 26th. No, wait. No, can't be. It says the 26th. I think. No, so I don't know. It's saying, oh, okay, the 25th, right? Yeah, the 25th. Okay, so this was yesterday. Um, I did, I did the same thing. I waited for the market to go above this level because there's resting liquidity right here, right? Um, so I had that marked out. And then there's liquidity out here. So right here. Oh, um, is there any more? Yeah, right here. All right. So we have these levels, and sorry guys, I'm trying to move this over. All right. So this was another trade where um I should have just like, but I think I made 200 or something like this on there. But you see, this is to 1 risk to reward. I got way too early. I'm sure what caused me to FOMO and just get out of the trade. I think I was confident because, like I said, this is a brand strategy I picked up, and I realized um, it's working. If I can just trade and make it and let it either hit stops or take profit, I'll be good to go. But unfortunately, I got out like still made some money on the account. I think that the problem is me being anxious to just keep the profit that I see instead of letting it play. But this was another picture perfect trade. This one actually straight to TD. It didn't mess around my entry. It didn't go into drawdown or anything like that. As soon as I got in after this inverse of the fair value gap right there, it went straight down, and that right there was a huge lesson. But you know, if I would have still been at the computer, I probably, you see, there was no real clean entry except for the fair value gap I see right here that got inverted. So I could have that. So boom. All right, got in on this candle. Boom. I want to put my stops below the low right there, and then I would have targeted that green line, and that would have been another 4 to 1 risk to reward. Okay, so I mean, yeah, I'm doing pretty good on the account, as you see. Very simple retracting using levels that the market is weak to hunt for liquidity, and that's pretty much it. I'm using NIU gaps, fair value gaps, and block my entries. Tonight was Asia session on gold. I wasn't quite sure if price would react the same way as I'm trading in the New York session, and that's why I kind of got out. But still in profit, I can't complain. Like I said, there's the account. My account's with Lucid. All right. So let me show you guys my Lucid. All right. And be completely transparent. I'm pretty sure if you're brand new to this, you have blown accounts as well. But let's go ahead and show you all of my evals. All. So look, breached, and there's more written because I have accounts. But let me also do that I have been paid out. And I am on being paid again on this account. So I'll be, showing you guys my journey. I'm not a guru. I'm just an average Joe. I do landscaping during the day. I trade possibly before work, and I try to trade after work if there's any setups. I have learned that risk management is key. And knowing how the market moves, order flow and liquidity is important. Those are steps that I tried to skip in the beginning. I didn't want to learn that. I just wanted to learn, where do I get in? How do I get in? How do I press the button? But as soon as you figure that out, guys, you'll be in a better place. Okay? So it's March 17th, 2026 for $2,000. And yeah, I'll be way more of these. I don't, these firms and getting to $20,000 a month. By the end of the summer, that is my goal. That's what I'm speaking into existence. If you guys also interested in getting some funding, if you want to start a business or anything like that, I am partnered with a funding company, and I will be leaving my link down below. You can get up to $50 to $100,000 in business credit at 0% interest. I'll leave that link down below so you guys can check that out, see what you qualify for. If your credit is not at a 700, which is what the requirement is, we can actually help you with credit repair. It's very cheap and affordable. They'll get you fundable and then help you get the funds so you could invest in a business and or trading. All right, so thank you guys for watching this video, and I'll see you guys on the other side. Make sure you like and subscribe. Take care.